Hello, everyone. Happy Friday to you guys. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. It's the last trading day of the week. Happy Friday to you guys. And of course, we all know how important days like this are, as majority in the market will be planning and, in fact, rounding off of their trading activities ahead of the weekend. And usually, whenever we have this kind of pattern in the market, there are chances that price may likely be starting to reverse from the direction of the prior leading price action as a result of profit taking activities. So we are going to be taking all this into consideration while reviewing the current financial landscape from a technical standpoint, using our basic tools such as trend lines, key levels, and chart patterns only to position ourselves for the next move. So I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Well, since the beginning of the week, we have been monitoring three financial assets on the Forex Morning Mastery, which includes the USOILSPOT, the USDJPY, the newly introduced asset after over 5 months of non-trading, and of course my favorite asset, the XAUUSD, popularly known as the gold spot. And in fact, we've done pretty well throughout the course of this week as we made significant amount of profit across this asset, and most especially on the USDJPY, where we were able to scoop in over 800 pips in profit from multiple buy entries. So today we are going to be taking a technical dissection into this chart to see how we can do a follow-up detail to this asset as we also prepare rounding off on trading activities for this week. For those of us who are joining for the first time, I'm very excited to have you around with us this morning, and I'm very sure you will be wondering what this is all about and what is it that we do on the Forex Morning Mastery with Sheriff Daramola. During the course of the weekend, I usually share a couple of videos which are supposed to be my plans for the week. And the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset to see how we will manage such positions and of course position ourselves for the next move. And as technical traders, we gather here every day, coming together as a community to engage, follow up and review the current trading positions in preparation of both the London and the New York sessions every day. The session usually kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC. However, today we are coming in very late, and in fact, I'm sorry I didn't mention that earlier. I'm so sorry for that. We had some technical issues which we needed to sort out, and thank goodness things are quite fine, and I really appreciate your patience as you waited for the session to start. So I encourage us all to stay tuned in so we don't miss out on any of the valuable ideas we will be deliberating on today. And of course, you need to understand that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own trading decisions and of course strategies. So once again, I welcome you on board and engage, encourage you to engage in the comment sections as always. So I see you, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. Trust you are doing very well, and I hope we are all preparing very well for a wonderful weekend. So with that being said, here we will be diving right into the business for today. And of course, you know what we do first. You know our routine on a daily basis. The first thing we want to be doing is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for today, Friday, January 19th, we have a couple of events. No, I think we only have one high impactful event, and that is from the United States economic docket. But I would like to have a very holistic perspective into this. So what I will do now is to include the mid-tier economic features so we can see if there are any other catalysts that will be affecting the market sentiment today. So let's see what we have here. Of course, we do have, and the first one on our list here is coming in from, the most important one is the one I will be looking at, of course, and the first one we are looking forward to is the publication from the University of Michigan, and that is the Consumer Sentiment Index. Now, for those of us who do not know what the Consumer Sentiment Index is all about, well, this is a data that gauges the prevailing sentiment and confidence level amongst consumers, providing valuable insight into potential shift in economic conditions in the United States. Changes in the Consumer Sentiment Index can influence spending patterns, impacting various sectors and, of course, markets. Now, looking at the Consumer Sentiment Index here, usually whenever the data comes in higher than expected, whenever we have a high reading, it gives us a positive signal for the United States economy, dovetailing to a positive traction in favor of the US dollar. Now, if we look at the previous data, that is for the month of December, it came in at 69.7, and we have economists projecting 70 for the month of January based on what is on ground. So what this simply tells us that the US economy has been very, very resilient in the last couple of weeks, and in fact all the data we noticed since the beginning of the week has been very, very impressive, as the US dollar is showing a resilient strength in navigating the current global financial landscape at this point. Then another data we want to be looking forward to today is the existing home sales, which of course gives us an insight into the real estate sector of the United States, which of course is considered to be another sensitive sector that determines the resilience of the US economy. Now, the existing home sales change provide an estimated value of housing market conditions, and of course the housing market is considered as a sensitive factor to the US economy, and it generates some volatility for the US dollar as well. Now, generally speaking, a high reading is positive for the US dollar, which of course tells us how resilient the US economy is, and a low reading considered as negative. Now, we have the data for the previous month, which is November, at 0.8% expansion, though we do not have any projection for today. But usually whenever we have such scenarios, we expect that we will be getting some projection maybe an hour or two before the event, so that we can have something to relate with whenever the actual data comes in. So we are also going to be looking forward to what the actual data will be here. Will it be beyond the previous month, or are there chances that it will drop to the downside to give us some insight into how well that sector is? Then finally today, much more later in the day, is the speech coming in from the Fed's official, Mary Daly. Well, she is the San Francisco Federal Reserve Bank head, and she has worked in the San Francisco Bank since 1966, and of course she is also an effective voting member of the Federal Reserve Committee as well. So whatever she says today will be scrutinized for insight into the interest rate trajectory of the Federal Reserve. And of course, at this point, we know how the expectation of a rate cut as early as the month of March has gradually reduced, as according to the CME watching tool, currently we have about 57% chances that there's going to be a rate cut by the month of March. And the data we have been seeing so far in the month of so far in the last couple of weeks from the United States are all pointing towards a higher for more interest rates in the near future. So we're still in a limbo at this point in time, as market participants are divided within if there is going to be a rate cut by the month of March, or it's going to be extended further. So we're still in a limbo, but we're definitely going to be relying on our technical skills coupled with the anticipation of this event to sniff through the current market structure, looking out for patterns and structures that will be helping us to strategically position ourselves for the next move. So I encourage us all to stay tuned in so we don't miss out on any of the ideas we will be talking about today. Grab your favorite beverages and let's see how the market is going to play out today. So with that being said, I see a couple of comments. I see you, Fred. Good morning to you, Fred. Yes, it was wonderful. Well, it was a very, very profitable week. After such a long time of absence, we were able to recoup a significant amount of profit on that asset, and I'm very glad that you were part of it too as well. Torres Master says, good morning. Let's end the week in style, pickup family. I love that. Thank you very much, Torres Master, and I love the energy you've brought in this morning. So with that being said, we shall be diving right into the business for today. And as usual, we are going to be starting with our usual asset. Of course, it's going to take some time again for it to load up. I didn't load this up prior to the beginning of the session. So while we wait for the chat to load up, please click on the like button and let's support this channel to grow. Click on the like button, and I really appreciate as you do so, and thank you very much. Okay, the chat is yet to load up, and let's wait for some couple of seconds rather, and let's see how far it's going to take before it catch up. Thank you. Now it's taking longer than expected for it to load up, so I would rather open a new chart instead. I wonder why my USOILSPOT usually takes a long time for it to load up. So let's open a new chart and let's see how this goes. Okay. All right, finally it has loaded, and the first asset we will be taking on today is going to be the USOILSPOT. And on the USOILSPOT, we've had quite an interesting last 24 hours. The last 24 hours has been quite impressive for us all, as we have been buying this asset since the Wednesday's trading. Is it Wednesday? Yes, where's this trading session? We have been buying this asset, though we had some interesting situations since the beginning of the week. It has been roller coasters of buys and sells, and then before we finally saw buying opportunity during the second half of the week, which of course moved significantly well, as we were able to scoop in over 300 to 400 pips on this one. And for the sake of those who are not part of the earlier session, let's quickly run through how the week started for us all in this community and what led to the decisions we made. So at the beginning of the week, we identified a range here where price was confined within the $73 area, and of course the $72.40 level, to give us an insight into the uncertainty that gripped the market during the first 7 to 8 hours of the week. And of course, whenever we have a range identified on our chart like this, the first thing we usually do notice is that this is telling us that the market is going through an uncertain situation. And what we do next is to ensure that we exercise patience and wait for a signal to come, which of course will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or probably the breakdown of the support line to give us an opportunity to sell. And we were lucky enough to capitalize on the breakdown of the support line, giving us our first sell position for the week And we saw how price moved about 100 pips in that regard. And of course, we had the privilege of adding more position at the breakdown of the $72 area. So we were able to run about 150 pips move before the buy position came in, and we did move our stop losses accordingly. Of course, that will have reduced a little bit to maybe around 50 pips or 60 pips thereabouts, depending on where you moved your stop losses to, or a worst case scenario break even if you had moved your stop loss to your entry point. Then going into Tuesday's trading session, we saw a little bit of consolidation phase as price action does break out of that descending trend line, which was supposed to be guiding our bearish opportunity at the beginning of the week. And one of the things we did agree on Monday is that if this descending trend line is broken to the upside, we will be looking out for patterns and structures that will support the idea of buying that asset. Now, we saw the consolidation phase happen, and we decided to buy this asset for on that day. We bought. We had two positions, I think. One of them went to break even and the other one went into a loss. So we recorded our first loss on this asset. Then on Wednesday, we had the privilege of joining a bearish move as price action break down the $72 area down into the $70.72. So at that point, we were already doing very well on this asset. And during our Wednesday's trading session, we did analyze the structure, and our center of focus on Wednesday was to be between the $71.40 area, as we saw how it has become difficult for sellers to continue the momentum, as we saw a barrier for sellers around the $70.72 area, as every attempt by the sellers to break through was always met with strong resistance from the buyers. Now, with a range identified here, we positioned ourselves for both possibilities. We talked about selling if price action does break down the $70.72 area, adding more positions to our existing trade at that point, or buying at the breakout of the resistant line of that range, which interestingly shares a beautiful confluence with that descending trend line. So we had a sell stop order triggered. Remember, we had a sell stop below the structure which was triggered but immediately went into a loss, and that led into price breaking out of the resistant line and that descending trend line to welcome a new wave of bullish momentum. And since that day, we have been buying this asset and adding more buy positions as we maximize the potential of the bullish move at the breakout of the $72.40 area and of course the $73 area. And during the live session yesterday, I did mention that we move all our stop losses, secure the current positions right below that newly identified ascending trend line, and we got price action taking us out of that buy position yesterday. And then we saw the resumption of the uptrend situation at the $73 area, and with a buy stop order above that structure, we capitalized on that move, added more position at the breakout of the $73.50 level. And as it is right now, we have a minimum of two buy positions running in profit, where the first one is running with about, let's see, with about 100 pips thereabout, while the second one is currently running with about 55 pips thereabout. And for those of us who did capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, as it is right now, price has moved significantly well since the beginning of the in the last 48 hours, and you know how we do it when price moves very well. The next thing we want to be doing is to move all our stop losses to secure the current buy position. And for me, if you would ask me, anywhere below that descending trend line we spotted on the higher time frame, remember we had a descending trend line on the higher time frame. Please, if you are not watching my video on the USOILSPOT we did at the beginning of the week, where I did a top-down analysis on this asset, I advise you to watch that video, as you will get an insight into how we got these levels, as we are only going to be talking and deliberating on the 1 hour time frame on the Forex Morning Mastery. So please watch that video after the live session, and if you had missed out, you can find the link right in the description box of this current video you are watching. So with the situation we have right now, I'm suggesting moving our stop losses to somewhere around that descending trend line, and of course above the second entry we have here at the $73 $2.50 level. And of course, always remember that while you move your stop losses, you want to be given enough breathing space for price action to move around. So move your stop loss around those areas, and let's see how the market will play out from that point in time. Now, with a well secured position at this juncture, what is going to be our next plan for today? And of course, remember that today being the last trading day of the week, it comes with some peculiarities, which for those of you who have been with me for a while now know that we might be seeing some rounding off of trading activities ahead of the weekend, and this could result into some profit-taking activities, reflecting on the chart as price action moving in the opposite direction of the prior leading price action. So we need to take all this into consideration while we review the current market structure. Now, the uptrend continuation still looks very valid at this point, and in fact, I think that the uptrend in the last 24 hours, remember we were looking forward to some reports from the EIA yesterday, and in fact it came in. We had a drawdown in the crude oil stock at 2.492 million barrels versus the forecasted 313,000. That was a phenomenal variance there, hereby having the idea that there is a high demand, because when there is a drawdown, it shows that demand has increased for the drawdown to happen. And when there is an increase in demand, what happens? Price usually rises. And of course, we saw how the market reacted to that, and we saw how price has gotten to a new week high at the $74.50 level. Now, a 40% output dropped in North Dakota due to extreme weather countered fears of slowing economic growth, and this also has attributed to the recent surge in price of the oil. Now, the other factor here, which everyone knows at this point, is the geopolitical tensions in the Middle East, which has persisted. And of course, we saw the US-led forces continue to strike the Houthi, the Yemen Houthi yesterday. That was the 5th year strike yesterday, and the Houthis still continue to attack the US vessels at the Red Sea. So this thing is still continuing, and the concerns of oil disruption the oil disruption is still very much in the air. Now, additionally, dismal Eurozone data and of course concerns about China's economic weakness and expectations of ample market supply in the first half of 2024 restrains meaningful upside for oil prices. So despite the fact that we have factors that are affecting the uptrend of oil prices, there are also factors that are going to be limiting the upside, which we of course do want to be taking into consideration as well. So it is also important to note that the recent US dollar rally, which we have been witnessing since about 2 weeks now, which of course has been as a result of the US resilient economy, and of course the increase in US Treasury bond yields supporting the US dollar to rise, is also going to be affecting the US denominated asset negatively too as well. And why is that so? Well, if the US dollar rises, then oil prices becomes very expensive to buy, because if you are going to convert your own local currency into the US dollar to buy the US oil product, you will be paying more to buy the US dollar. And when this happens, you know what happens? Demand will definitely reduce. People will restrain from buying more, managing whatever they have, pending the time that the price is very competitive enough to buy again. So these are factors that we are looking in place, which could also limit the upside of the USOILSPOT assets. So at this point in time, it is very, very important that we secure the current buy position while we remain vigilant to see how the market is going to be playing out today. Now, as we prepare for today's trading session, we are going to be taking all these factors into consideration. Then also, above all, is the fact that today being the last trading day of the week, there is this idea that majority may want to be rounding up their trading activity, taking off the profits from the chart, and this could result in a downtrend scenario. So let's look at things from a technical standpoint. What is really going on here, and how do we intend to maximize the next move in this market? So with the way things are going right now, things are looking very bullish at this point. And this morning I did update us on both my TradingView and Telegram platform that we will be adding more position if price action breaks out of the highest point for this week had a $74.15 level, which appears to have been broken right now, and price action has triggered the buy position. And if you had your buy stop order there, you must have had a buy position triggered at this point in time. Please remember, your stop loss is very, very important to be in place right below the previous low. Looks very much interesting. Between 40 to 45 pips on this one seems much more reasonable at this point in time. So with the situation here, we continue to hold on to a bullish bias. Price has just broken out of that descending trend line we identified on the higher time frame, which makes it much more interesting to look out for more buying opportunities at this point. However, as buying opportunities remain on the table for today, we still have chances that we could have a little bit of retracement. Or you all know that from a technical standpoint, when price breaks out of a key structure such as this descending trend line, we may likely see at some point price come back to retest the structure in anticipation of another wave of bullish momentum. So we are going to be taking that into consideration as well. So as it is right now, we have our is it third position right running? I think. Okay, let's look at it closely. So since yesterday we are bought above the 73, we added more at the $73.50 level, and right now we have another one triggered. So we have a minimum of 3 positions running in profit right now. And please, at this point, I will suggest that we move all stop losses above that ascending trend line. So in case price action drops to the downside and we get taken out, we want to see how the market will react to both the trend line and the $73.50 level in an attempt to know where price will be going. So if we cite buy pressure above the structure, maybe it could come in the form of a double bottom structure, head and shoulder pattern, or a falling wedge. Mark out your neckline, and then we will be buying the breakout of the neckline and join the uptrend continuation to the upside. However, if price drops back below the descendant trend line, then we shall be back within the seller's territory, looking out for selling opportunities like a retest of structure or continued selling pressure below the $73.50 level to join the bearish move to the downside. So we are at a very crucial point in the market. I encourage us all to mark out these levels on the chart, as we will be needing them as a reference point to guide our independent trading decisions for today. Then there's one more thing I was able to acknowledge here this morning after trying to decipher what the next line of action would be. So I would like to delete all these red highlighted lines. So let's have a clean chart. All right. So I identified an ascending trend line this morning after noticing what has been going on in this market in the last 72 hours, that is last 3 days since Wednesday's trading session. You will see how this ascending trend line had played a major role in pushing price action to the upside. So for today's trading session, this ascending trend line here is what we will be using to guide our trading decisions for today. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying that asset. Now, as it is, if price retraces and the buy position we take gets taken out and comes back into the structure, we're still going to maintain a bullish bias as long as price remains above the structure. We may see buy patterns here, reversal patterns, I say, then join the uptrend continuation. However, if a breakdown of the trend line happens, price will also have broken down the $73.50 level to incite the opportunity of selling this asset. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So our center of focus for today is basically between the $74.15 level and of course the $73.50 area, where depending on the direction of the breakout would give us an idea into where price may likely close for this week. So I just hope that we mark out these levels on our chart, as we will be needing them to guide our trading decisions for today. And I do hope I made myself very clear. But if you have any questions whatsoever, feel free to let me know in the comment section below. So I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Hello, Krishna Veni. Namaste to you. Good morning. Namaskaram. How are you doing today? I'm glad to have you around with us this morning. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next asset on our watch list. All right, so the next asset we are going to be looking at this morning is going to be the USDJPY, which interestingly did very well. In fact, I will consider the USDJPY as the most profitable asset on our watch list for this week, as we were able to scoop in over 800 to 900 pips during the course of the week, as we continue to buy this asset all through the course of the week, having multiple buy entries in that regard. Now, for the sake of those who missed out on on our earlier sessions, let's run through how the week began for us all in this community and what led to the decisions that made us to buy this asset. Now, first of all, for those who are joining us for the first time, I want to reiterate here that if you had missed out on my weekend videos on the USDJPY, I encourage you to watch them so you can have a background knowledge of how we identify those levels, which we will be talking about in a moment. The links are right in the description box of this current video. Check it out after the live session. So here we are on the USDJPY, and the first thing we observed during the course of the weekend was the fact that we had a beautiful key level, which was situated at the 144.800 area. And you know how we use our key levels in this community. As long as price remains above the key level, we continue to look out for patterns and structures that supports the idea of buying that asset. And now the week started with a very strong bullish momentum, though we had a little bit of consolidation during the first 8 to 10 hours of the week, where we saw price action confined within the 145.240 and the 144.870 area to emphasize the level of uncertainty at that particular point in time. And of course, you know how we do it in this community. Whenever we identify this sort of range, we want to exercise patience, waiting for price action to give us a signal, either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And at no point in time did we see price action break down the support line of that range, hereby negating the idea of even considering selling this asset. But instead, price broke out of the resistance line of the range, triggering buy positions, and we kept on maximizing the potential of that bullish move, adding more positions at the breakout of the identified structures on the chart for every session we had throughout the course of the week. So we had levels like the 145.550, we had a 145.800, we also added one more at the 146.450 right here on Tuesday, Wednesday, and we added another one at the 147.400. We added another one right here at the 148.200. I think that was the final one we had before the bearish momentum began on Thursday morning. And with that situation, we saw the bearish momentum. And during our live session yesterday, I was of the opinion that the bearish momentum we were seeing on Thursday morning may be as a result of profit-taking activities, as most of the key players in the market who had bought this asset since the beginning of the week must have made significant amount of profit, and as a result of it, they might want to be taking some profit off the chart, and this would reflect on the chart as a sort of retracement of that bullish momentum. Now, during our live session yesterday, we identified the fact that since price still remains above those ascending trend line we spotted at the beginning of the week, we shall continue to look out for patterns and structures that will support the idea of buying. So we had this one right here. We had this ascending trend line which was broken, but the fact that the other ascending trend line still remains very much intact, that is this one right here, remaining very intact, we decided to continue to look out for buying opportunity, and unless sell if price breaks down that ascending trend line. Now, with the situation from yesterday's live session, we had a beautiful range where price action was confined within the 147.950 and the 147.700, just sitting above the ascending trend line. So we said here that we shall continue to buy this asset as long as price remains above the ascending trend line. So we position ourselves just right above the 147.950, capitalizing on more buying opportunities on this asset. In fact, if you had missed out on that breakout, the market was kind enough coming back to retest the structure and boom, continue the uptrend to the upside. And since yesterday we saw price move over, let's see how many pips that was from this particular entry. It moved about 88 pips thereabout, and of course we had about 3 positions running on this one, hereby maximizing that one. We had 88 pips. We had a 60, that's around 140, and of course the last one right here about 30 pips. So we have roughly 200 pips before the bearish momentum happened. And I do hope you moved your stop losses accordingly. If you do so, you must have been taken out of all buy positions with a reasonable amount of profit at this point. And once again, well done and kudos to you for being on standby to capitalize on that move, and well done for following our usual instruction of moving stop losses whenever price action moves significantly well. Now, with the situation we have right now, if you are with me on both my TradingView and Telegram platform, I did give an update this morning that it appears that we're beginning to see some sudden bearish pressure, which for me is like a myth right now, as the fundamental factors behind the scenes were only supporting the uptrend situation in this market. And I did emphasize this morning that we should exercise cautious, as we might likely see the trend continue to the downside, maybe as a result of market participants rounding off trading activities for this week, which would result in price moving in the opposite direction of the proud leading price action, as majority may not know what will happen during the weekend or before Monday session open. So to be on the safer side, they would like to take some profit off the chart, and this could lead to continue downward situation. Now, with the scenario we have here, I mentioned in my commentary this morning that we shall be using the levels identified on this chart to guide our decision. And for the fact that price action broke down the ascending trend line we spotted here, it made quite a lot of sense to look out for patterns and structures that will support the idea of selling. And as a result of this, I acknowledge this in my commentary this morning that we shall be selling the breakout of the 148.200, which has already been triggered right now, as we had a breakdown retest of that structure, and then price action is gradually approaching the 147.950. And for those of us who capitalize on the sell move at the breakout of the 148.200, kindly move your stop losses right now to your entry point, as the market outlook still remains very bullish at this point in time. And if price continues to drop to the downside, in fact, if price can break down the 147.700, we are likely going to be seeing a massive sell-off to the downside. So let's mark out these levels, as they are going to be guiding our trading activities for today. So for those who had sold at the 148.200 I just mentioned, move your stop losses, secure the current sell position, and let's see how the market is going to be reacting to the 147.950. So at this point in time, I'm not looking out for selling opportunities here. Sorry, I'm not looking out for buying opportunities here at this point in time, since price has already broken down those ascending trend line. It broke down the first one yesterday, and it has broken the second one about 3 hours ago. So let's maintain a bearish bias on this particular one. And if you look at the structure, you will see that in the last 48 hours, the bullish momentum that started the week has reduced. As you will see, price action is currently ranging right now in the last 48 hours between the 148.500 and the 147.700. So I think the bullish momentum has reduced drastically, so we shall continue to maintain a bearish bias from this area. Now, to buy the USDJPY, I would rather see price action climb back above that ascending trend line, and it of course shares a confluence with the 148.500, where I will be looking out for buying opportunities to continue the uptrend scenario. And if this continues, a breakout of the 148.800 will welcome more buying opportunities. So I would like to mark out this level, and I hope you do so as well, as we will be needing it to guide any bullish opportunity if price action continues to climb and find new highs on this market. So let's see how this will play out. We are in a very selling opportunity right now. We have a sell position running right now, and I think we have the second sell position triggered at this point, and let's see how far this is going to go. Please secure your first sell position right now, move your stop losses accordingly, and lock in that profit right there. So I will definitely be giving you updates on both my TradingView and Telegram platform as we continue to monitor price action. Please click on the like button if you have found this session or content helpful and useful in making your independent trading decision. I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance as you do so, and for those who had already clicked on the like button, you guys are wonderful and I really appreciate that. So I will be taking the next 5 to 10 seconds. I'm already running out of time right now to see if there are any questions before we move on to the final asset on our watch list for today. All right. So in the absence of no questions, I just want to assume that we are all on the same page at this juncture, and let's move on to the next asset, and of course the final asset on our watch list for today. So the final asset on our watch list for today is the XAUUSD, my favorite asset, popularly known as the gold spot. And on the XAUUSD as well, we've done phenomenally well since the beginning of this week. And of course, we had situation since the beginning of the week. We have been selling this asset since the beginning of the week, and not until where's this trading session we begin to notice a stall in the bearish momentum, giving us a beautiful temporary demand zone around the 2006 and the 2002 level, where we looked out for buying opportunities. And since then we have been buying this asset, giving us the privilege of making some more profits in addition to what we made during the first half of the week. So let's quickly run through what happened at the beginning of the week for the sake of those who are not part of our earlier sessions, so you can have an idea into what led to the decisions we made. So at the beginning of the week, we had a beautiful range, of course. The week started on a strong bullish note. In fact, it started at around the 2046 level, and it culminated at that resistant line at the $2,058 area, giving us a beautiful range to work with at the beginning of the week. And as a result of this bullish traction that started the week, we were of the opinion that price action may continue the uptrend, and in fact we had an ascending trend line to buttress that fact. As you will see, we captured a series of higher lows since last week Wednesday, giving us that ascending trend line where we were looking out for patterns and structures that will support the idea of an uptrend continuation. And in fact, we were expecting price to break out of that resistant line at the 2058 to join that uptrend move, which of course never happened. And during the New York session on Monday, and for those of us who are part of the XAUUSD live monitoring window, we identified a new level had a $2,053 area, which shares a beautiful confluence with that ascending trend line. And in fact, we said if price action can break down both the ascending trend line and that 2053 level, we will be selling this asset at that point. And of course, we saw what happened during the early hours of Tuesday's trading session. Price did break down, retest the structure, and since that moment, we have been selling the XAUUSD. And not only selling, we maximized the potential of the bearish move, adding more positions, had the breakdown of the 2046, the 2035, which happens to be our key level, and we kept on adding more position at the breakdown of the 2022. Now, right here on Wednesday, if you are with us on the Forex Morning Mastery Wednesday session, we had a simple setup identified on the 50 minutes time frame, where we were thinking that because of the inability of sellers to break through the 2022 area, that we could be seeing some buying opportunity. And of course, we did capitalize on that one, but it did not do very well at all, as sellers took over the market, gave us a loss on that buy position. And of course, we capitalized on that and joined the bearish momentum to the downside. So we had our losses, but we were able to scale through on this one and come out very positive on this trade as we rode the momentum all the way into that demand zone around the 2006 and $2002 area. Now on Wednesday's trading session, Wednesday morning, I think it's a Wednesday morning, yes, Thursday morning, I guess, we noticed that sellers were finding it difficult to break through that area. Now, because sellers were finding it difficult to break through that area and the persistent buy pressure around that area, we decided that we might be transitioning into a reversal setup that may push price to the upside. So because of this observation, we decided to position ourselves just right around the $2013.50 level. If you remember vividly, we marked out that level on Thursday. We capitalized on that, and during our live session yesterday, we said we will be adding more position at the breakout of the 2022, and if price continues to climb new highs, the breakout of the 2035 area will definitely welcome more buy position. So we've been doing very, very well on the XAUUSD so far this week, and for those of you who are taking advantage of all of these opportunities, well done and kudos to you for being on standby, capitalizing this move. Now, as it is right now, we are with our current buy position, we have a total of over 200 pips running in profit right now on this buy position. So the next thing I will be advising us to do right now is to ensure that we move all our stop losses. Let's secure this current buy position while we wait and see how the market will play out for new opportunities. If you would ask me, anywhere above that entry point seems most appropriate, between the $2026.50 and of course the $2022 area seems most appropriate to move all stop losses to. Remember, we always want to give enough breathing space for price action to move around, just in case it wants to continue the uptrend scenario. So as it is right now, I still think that this momentum may continue upward, but one thing I would like to state here is that we should not ignore our key level at the 2035 area, which is supposed to be playing a major role in guiding our trading decisions for this week. And of course, we saw how price broke down that level right here on Tuesday, and from a technical standpoint, when price breaks down a key structure like this, we expect that price at some point will come back to retest the structure, and maybe it will incite the second leg of the downtrend continuation. So we are gradually approaching a crucial juncture in this market, so we need to take note of all of this. Now, behind the scenes, there are quite a lot of things that are affecting this market, and in fact, the rebound of the XAUUSD is as a result of the US dollar recovery. And you know, those who had bought the US dollar at the beginning of the week may likely want to be doing some profit-taking activities, which has resulted in this bullish traction we've noticed here in the last 48 hours. And as a result of this, the US Treasury bond yield as at this morning is currently consolidating at around the 4.14%, and of course the resilient US economic data and the Fed's dovish stance dampen expectations of an imminent rate cut as early as the month of March, and this is supported by a decrease in weekly initial jobless claims that came in yesterday at 187,000, which of course is an improvement in the U.S. labor sector. And of course, the Philadelphia Fed Manufacturing Survey also saw an expansion of I think how many? I think -7 compared to the -10.6 that was expected for yesterday. So the U.S. economy has been very resilient at this point. So I will say that this uptrend traction may be as a result of profit-taking activity. So we should not get too carried away that price may continue that uptrend all the way to the upside. And like I said earlier, we have a situation right now where price is gradually approaching a very important key level at the 2035 area, where depending on what happens around that area today will determine if we will continue the uptrend to the upside, or we may likely see selling pressure around that area, and the inability of buyers to break through that area will incite a downtrend continuation as a result of the resilient US economy. And one thing for sure is that as today gradually comes to an end, participants in the market will definitely want to be looking for fresh impetus to know if the uptrend will continue or the likelihood of the downtrend is still very imminent. So we're looking forward to some economic features today. We talked about this at the beginning. Preliminary US Michigan Consumer Index, Sentiment Index. We have the existing home sales. We talked about this as well. And the speeches from the FOMC members, that is Dali, who is going to be speaking later today, and I think Batu is going to be speaking later today. So at this juncture, I would advise us to secure the current buy position. We may see some volatility happen today, and if you're always part of the XAUUSD live monitoring window, and then you can be part of that session so that you can see us how we position ourselves for the next move during the New York session. So at this point, we are at a very crucial juncture, and to make things easier for us today, I have an ascending trend line that I did identify this morning. And for those of you who are with me on both my Trading View and Telegram platform, you will be familiar with this. So what I did here was to connect the series of higher lows since Wednesday's trading session, and in fact that gave us this beautiful ascending trend line, which will be playing a major role in guiding our trading decisions for today. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying this particular asset. So we maintain a bullish bias at this juncture, and the only condition that will make us want to be selling this asset is for price to break down and retest this ascending trend line. Then we can start considering selling this particular asset. And of course, I will be giving you updates as at when due on both my Trading View and Telegram platform. And there is one more thing I would like to share with you again before I round up on the XAUUSD, which we did talk about at the beginning of the week, and that is on the 4 hours time frame. And I want you to see how interestingly the price action or the psychology in this market has respected the structure we did identify on the 4 hours time frame. Now, if you remember vividly, we did talk about this situation here at the beginning of the week. I think on Monday or Tuesday we talked about this after taking into consideration the nature of price action since the month of December. And of course, we had a beautiful demand zone around the $2015 area and the 2025 area, which of course had played a major role in negating all attempt by the sellers to break through that particular structure. Now, when the new year began, we saw that it was more of profit-taking activity at the beginning of the year, resulting in the series of lower highs you saw in this market, giving us this beautiful descending trend line. We saw at the beginning of the week. So we marked out this one, and in fact I want to project this a little bit to see if it captures. Okay, we have something like this. So we had like a couple of descending trend lines right there, and we saw our price broke out of the descending trend line and of course the key level last week Friday, confirming how strong that demand zone is around the 2015 and the 2025. Now, from a technical standpoint, whenever price action break out of a key structure, we talked about this on Monday. I said here that price may likely come back to retest the structure that was broken, either the descending trend line or come into the demand zone area to inside the next wave of bullish momentum to the upside. And in fact, you can see what has happened. Though price action broke down the descending trend line a little bit, but you will see that price action appears to be gaining traction, and this may likely be the second wave of the bullish momentum that started last week Friday. So let's see how market is going to react to the 2035 area, which was our key level, and maybe this could be serving as our key level for next week too as well. But let's see what happened here. The 2035 level is gradually being approached. We want to see how the market will react to the structure, and this definitely will give us an insight into what our next line of action will be. So stay tuned in. If you are with me on my TradingView and Telegram platform, I will definitely be giving you updates as at when due. And of course, if you are going to be part of the XAUUSD live session, you will be seeing how we shall be monitoring real time the XAUUSD. So the XAUUSD live window is a platform born out of popular demand from this community, where we come together to monitor real-time price action on the XAUUSD. So I'm yet to drop the link, so let me just quickly look for the link and drop it right in the comment section. So you do want to be clicking on that link and then click on the notify me button, so that you can get notified as soon as we come online. So I just dropped the link right in the comment section. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So the XAUUSD live window comes up about 5 to 10 minutes into the New York session, and it usually lasts between 5 to 7 hours of the New York session, depending on how the market condition is. So let's see there, and let's continue the trading activity on the XAUUSD. So on this note, I round off on the XAUUSD. If you have any questions, feel free to let me know in the comment section. I'm yet to see tractions in the likes. Please, if you have found this content helpful and useful, kindly click on the like button. This is the cheapest way you can support this channel to grow. Thank you very much as you do so. Just click on the like button. I really appreciate as you do so. Thank you. And let's see if there are any questions before we round off for today's Forex Morning Mastery session. All right. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we shall be rounding off on the grand finale for the week for the Forex Morning Mastery with Sheriff Daramola. And I do hope you had a wonderful moment. I in fact enjoyed every single moment with you guys, and in fact this week was very, very phenomenal for every one of us, as since the beginning of the week we have been monitoring three major assets, including the USDJPY, the newly introduced asset for the week, and in fact we did very, very well, and this asset is actually considered to be the most profitable asset for us for this week. And for those of you who capitalize on this, well done and kudos to you. Then we also went on to enjoy some things on the XAUUSD and the same thing on the USOILSPOT, though we had some couple of losses on that one, but we were able to make significant amount of profit that drowns the losses we made. Well done, everyone, and kudos to you guys. And in fact, I'm so excited that the week has ended, and we hope that the week will end on a very much positive note today. So I look forward to seeing you all in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. And I do hope that you are able to mark out the levels we did identify today during the course of the session. And if you do so, I encourage you to exercise patience and allow the structures to mature before you jump into any of the positions we have projected. Remember, every decision we make in the financial market is more or less an educated guess, and as a result of this understanding, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. So with that being said here, we shall be rounding off. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you do, you want to be part of our subsequent editions on Monday as we come here again to review how well these assets have been doing. Now, remember that the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gather here to make your own independent trading decisions. And for those of you who are yet to subscribe, if you are yet to subscribe, please, I encourage you to do so. During the course of the weekend, I usually share a couple of videos in preparation for the upcoming week, so you don't want to miss out on them, as you need to go through them as we prepare for the first Forex Morning Mastery for the next week. So click on this subscribe button, click on the notification button so you can always get notified as soon as I drop new content like this, and of course commentaries as always. So on this note, I want to wish us all the best of luck today. Have a wonderful weekend. Trade smart, trade consciously, and happy weekend to you guys. Bye bye.